Here we are, ladies and gentlemen. Let's begin today, shall we? We are here. Thank you for all for joining us. So we're here today to talk about the complete Ichimoku trading guide, and I appreciate you joining me. I appreciate that for many private traders, many retail traders, they will have not have heard of Ichimoku, or if they have been somewhat sort of intimidated by the sort of what might appear to be the sort of the complexity of it. But here we are today to actually sort of talk about the various ways that you can learn to understand it and utilize it in your own trading, and also show how to trade it utilizing the Admiral markets MT4 and MT5 platforms. As always, it would really help me and ourselves here at Admiral Markets if we could just understand, if you could just quite quickly in the chat box, just let me know what, if any, experience you have of trading with Ichimoku, or if you've complete beginner to it, never heard of it, just helps me to try and sort of understand and pitch the webinar at the right level for you, also that you can get the most value from today's event. So what are we going to talk about today? Well, not unsurprisingly, we talk about what is the Ichimoku indicator. What are the benefits of using this indicator, especially for new traders? What are the sort of challenges that traders see when they're sort of exploring using Ichimoku? How to interpret the different pieces, the different elements of the indicator, how to use it in your trading, and we'll have a little look at how to use this indicator in real life. Okay, if there's time, we'll switch across to the charting platforms, and we'll have a little look at what's available there in terms of opportunities that are running at the moment. So Robert said he uses it all the time. He's been using it for about 8 years. That's excellent, Robert. That's great. Thank you very much for joining us. Andre said he's got no experience there. So as I said, if you've got any thoughts or ideas, please just to drop them in there. We'll be really appreciative of the ways that you can actually sort of help us. Okay, so that we're in a position to give you as much benefit as possible from our webinar series. As always, if you're watching this from later on the YouTube channel or on the Facebook page, then please, if you're liking it and enjoying the content, give us a like or drop us a question in the comments box. We always really appreciate the interaction. Okay, we're always looking for feedback. We're always interested in kind of future topics that you'd like us to see us here cover on the Admiral Markets Trading Spotlight webinar series. And as always, ladies and gentlemen, we appreciate here we understand at Admiral Markets that traders need support, outside and beyond the webinars that we provide for you. And what we've created here is the exclusive Trading Spotlight community on Traders Yard. So it's an opportunity for you to get some support after the webinar when you most need it, and it's a chance to sort of see some of the sort of trading strategies and upcoming market events that are occurring this forward week. I'm normally there, and I put this up because after this event, I'll be here for the rest of the afternoon in Traders Yard. So if you have particular questions, then please feel free to ping them in there. Okay, it's an opportunity to have some interaction with traders, and you'll find my colleagues Marcus and Jens. They're posting some fantastic information there on an almost hourly basis there in terms of their own kind of trading styles. And you can also tap into any of the recordings for Trading Spotlight that you may have missed in the past. Very easy and simple to join up. You can just go to tradersyard.com, and then, as I said, join the Trading Spotlight group, tradersyard.com/group/312. And as I said, I'll be in there this afternoon after this webinar completes. So please feel free to sort of join me there if you want to continue the discussion about either Ichimoku trades or your trading in particular. So as always, if you don't know me, my name's Paul Wallace. So I've been trading for a good while. I trade sort of for funds and for high net worth clients. My own trading primarily focused on FX indices and commodities. I like to trade trends for my sort of swing and position trades, and I like to be a mean reversion trader for my intraday trades. And here we are with Admiral Markets. Admiral Markets are a Forex and CFD broker with over 8,000 financial instruments with offices in 20+ countries. So as it says, their global expertise with local support. And they are licensed and regulated across a broad range of regulatory environments and providing competitive spreads on the most popular trading instruments. So as you can see there, 0.6 pips for euro dollar, 0.8 pips for the DAX. And you can engage with markets using the world's most popular trading platforms, MT4 and MT5, which are available on your phone, desktop or browser. And you will also have access to the Admiral Markets Supreme Edition plugin. If you have any particular questions there about Admiral Markets, please get in touch with your account representative, and they'll be very, very happy to answer your questions and help and guide you in your progress. But here we are today, ladies and gentlemen. We're here to talk about the Ichimoku trading guide. I'll just move our elements around here so we can see. So I appreciate that there'll be people here joining us. There, like a couple of people in the chat box said that we'll have absolutely no idea what Ichimoku trading indicator is, and it's not something that's as prevalent, shall we say, as other kind of trading indicators are sort of advertised throughout the trading industry. But if we can just sort of break it down into what we're going to discuss today, it's about imagine having an indicator that gave you an all-in-one picture of the market that allowed you to define support and resistance, trend direction, and momentum. And the question with that would be, would that help you in your trading? And for a lot of new traders who are just grasping to with the sort of the whole breadth of available topics to learn about in trading, well, actually the Ichimoku sort of trading indicator might be something that provides them with a almost like as it says there, an all-in-one picture of the market that would allow them to sort of trade with a little bit more clarity and a little bit more sort of opportunity in terms of understanding markets. And so that's the Ichimoku trading indicator, which we're going to discuss here today. And we'll cover lots of aspects of it. If you've got questions, please feel free to shoot them out. As always, there's a little bit of personal ways of how to interpret an indicator in terms of how you particularly wish to use it, depending upon your risk profile. Some people are very risk averse. Some people are very risk accepting and aggressive, and we'll touch upon that as we talk through our session today. So as the question says there, well, why do people not use Ichimoku? Right. Well, it's quite simple, because when people just look at an Ichimoku chart there, and this is actually a chart for XRP, Ripple on the daily chart. Well, one of the reasons is that people are a little bit intimidated by it. People can be a little bit confused by it. They can sort of misinterpret elements of it, and then looking at what's known as a cloud, or you might be seeing there in the kind of vertical lines drawn on the chart. It sometimes intimidates new traders. It sometimes sort of leaves them scratching their head more than being able to make sense of it. But what we're going to hope today is to provide just a little bit of an early insight into how the Ichimoku indicator works, and how you can utilize it for your to help with your own trading. It's supposed to be an introduction to actually help you, give you a trading indicator that you can take away and utilize in your own trading, and hopefully today's session will help you progress with that. So, as we said there, people tend to be intimidated by the Ichimoku cloud. All right, so that's what we see, new traders in particular. And what we're going to do today is look at educating you on how to interpret markets and trade using the Ichimoku indicator. And I'm also going to show you how to set it up on the Admiral Markets MT4 platform. That's another element that has perhaps been sort of maybe overlooked in terms of what has kept traders from using the particular indicator, is that MT4 and MT5 are very, very popular trading platforms, but up until recently they weren't really set up to be able to sort of demonstrate or trade with Ichimoku, but that has all changed, as I will show you. Admiral markets now provide that, okay, as one of the indicators that their clients have access to, and I'll show you how to set it up and how to put it on a chart, and give you the idea of how you can start to utilize and look at it, and how I particularly look to utilize it in trading. So, my definition is that the Ichimoku indicator, it's made up of 3 different components, okay? You have the first element, which is the conversion and the baselines, all right? They're the elements that look like moving average on your charts, but they are not moving averages, okay, as I will explain in a few slides' time. Then the kind of main element, or the element that people sort of look at, is the Ichimoku cloud. This is what is is popular, as it says there, because it stands out. But also, as I said, that's what can intimidate new traders, because they've seen nothing like it before on their charts. So they are left scratching their head, trying to work out, what on earth is this? What on earth is this indicator on the charts? How do I utilize it? Is it just actually helpful to me, or does it confuse me? And hopefully, what we'll be able to do today is to sort of just give you a little bit of insight, is to give you that clarity to be able to understand what not only what the cloud does, but also the conversion, the baselines, and how when they work together, they can help you sort of look to take into trends. And finally is called the lagging line, okay, and it represents a lagging close of 26 periods. I'm actually not going to talk too much about that today. Personally, I haven't found that terribly useful myself in my own sort of view of trading Ichimoku. I think understanding the conversion and the baselines and understanding the Ichimoku cloud, that's where the meat is, ladies and gentlemen. That's where the main element, the main thrust is, and what we'll look at is that's what we'll particularly focus on here. Now, one of the things I would say about Ichimoku indicator is that it's primarily set up to help you, as I said, identify levels of support, resistance, help you identify trends and momentum, and that's where it excels, okay? That's where it excels. That's where it comes into its own in terms of being able to help you try and enter a new trend and stick with the trend, okay? And that can be one of the most challenging elements for a new trader, is to not only find a trend, but actually, how do they stick with it, okay? How do they stick with that trend to allow those kind of profitable long-term trending trades to develop? And that can be a challenge, and I'll touch upon a couple of ways you can do that today, okay? There's a little bit of as I said, there can be a little bit of interpretation based upon your own risk profile, and that's a particular element. But hopefully, as we go through the next few slides, that will all start to become just a little bit clear in terms of understanding. So, as I said, looking at the chart here, well, this is actually how it shows up, and hopefully this will start to provide just an element of clarity. Not unsurprisingly, it's quite quick and easy to see where the cloud is, okay? And let's just use the drawing tools as always. We have here, okay? Oops, just 1 second. Is that we have the sort of the tools here that we can utilize here. I'm just going to drawing tool up here. So, not unsurprisingly, okay, you can see, we have the cloud here, okay? The cloud is actually covering a fair amount of it, okay? You can hopefully see it there, okay, in the chart, and I'll explain how that's created and what it does. But we also have our, as I said, we've got the conversion line and the baseline on a chart, okay? And in this particular instance, we have the red, okay, is the conversion line, the blue is the baseline. As I said, they look like moving averages, but they're not really moving averages, as I'm about to explain. And then the green line here, okay, is the lagging line. And as you can see, okay, it's lagging a fair amount behind price. And as I said, I'll explain a little bit about that, okay? But today, what we want to do is keep it as simple as possible and focus on the conversion, the baselines, and the cloud, and how their interactions with price action allow us to create a trading plan, to how to use the trading indicator. So, as I said, people sometimes don't use Ichimoku because they're a little bit intimidated, okay? They feel absolutely, a little bit overwhelmed by it when they see it on the charts, because it's different from what they are used to being seen. But realistically, when you consider it and look at it, after price, you only have really 4 other elements on a chart, okay? Your conversion line, your baseline, your cloud, and your lagging line. And so actually, you don't need any other indicators, although you may wish to. What you can do, okay, is actually just to utilize these 4 simple elements, with price action that actually provides you with quite a simple way to sort of start to look to trade trends. And actually for new traders, once they've got over that initial resistance, once they've got over that kind of, let's say, initial intimidation and realized how all of these kind of elements of the Ichimoku cloud trading indicator click together, well, then actually for so many traders, it becomes a much simpler way to trade because it becomes quite easy to understand when the market is either trending or when it's not, or when it's actually the opportunity to sort of take a trade and to try and stick with the trade. And that can actually be the challenging thing for all traders. Once you've picked a trend trade, to actually have the opportunity to stick with it and ride it as long as possible. So let's have a look at how we can understand this indicator here, okay? So firstly, we're going to look at the lines, okay? You've got the conversion line. Now, I'm just going to once again use my thing. The conversion line, okay? Now, part of Ichimoku, if you hadn't worked it out already, Ichimoku was actually created back in the 1960s by a Japanese journalist, okay? So we are using, let's call it the westernized version of it, okay? Or the Western interpretation of the Ichimoku line. So it's not unusual that, we might call the conversion line, okay? Which would be this line here, which in the Japanese name is Tenkan-sen. And if I haven't pronounced that properly, then please do apologize. I'm a better trader than I am a linguist and interpretator. But what we really want to know as traders is the conversion line is the fastest and most sensitive line. Okay, it follows price the closest, and you can probably see that on the chart there. Okay, the conversion line is the line closest to price. Okay, it's the one most sensitive. It's the one that follows it the most closely. The baseline, okay, here we have it. The baseline on here on our charts here is the blue, which we pronouncing in Japanese would be Kijon-sen. Once again, I apologize if I pronounced that incorrectly. And that trails the faster conversion line, okay? But as you can see, it still follows the price action pretty well, okay? It still follows the price action pretty well. And whilst they look like moving averages, they are not moving averages, okay? What they actually do is they show the average between the 9 and the 26 period high and low, okay? So they are not moving averages, okay? Moving average would just basically normally take the close of the last 9 periods, okay, form an average of that and plot it. This is the average between the 9 and the 26 period high and low. Now, as I said, for those of you who have traded for a while might actually recognize the 9 and 26 periods, take place in the MACD indicator as well. But this is not the MACD indicator. It's not the moving average, okay? It just shows the average between the 9 and the 26 period high and low. And we'll have a look in a chart or two as to why that becomes important and actually how that particularly helps us. So, as we said, they show the average between the 9 and the 26 period high and low. So the conversion line, okay, remember the conversion line, which in our chart here is red, okay, Tenkan-sen equals, it's the middle of the 9 period high and low. That's what it's plotting, all right, the middle of the 9 period high and low. The baseline, okay, the blue line here, Kijon-sen, is the middle of the 26 period high and low. And as I said, there's some sharp traders, they may also recognize those periods being used for the MACD indicator as well. But this isn't the MACD indicator, okay? It's not a moving average, okay? It's showing something different, and that's what helps us create this conversion line and baseline. So the conversion line and the baseline, they have two purposes. They can act as support and resistance during trends, and they also give us an idea of momentum, right? Which, if we're, in a trend or looking to try and stay with the trend, that becomes very important to us, okay? So when price is above the conversion line, which is also above the baseline, then that signals bullish momentum. Okay, so let's just use our drawing tool. You can see here, ladies and gentlemen, okay, you can see price, okay, price is above the conversion line, which is also above the baseline. That is showing us that there is bullish momentum in that market, very simply, okay? So we would only look to take, sort of long trades when price is above the two lines. And we'd only look to take sell trades when price is below the two lines. Hopefully that's quite simple. Quite simple. So, we're looking for, ideally, for places where we have price above the conversion line, which is also above the baseline. So that is just giving us an idea we're into a trend, okay? And we also have momentum bullish, in this particular case, bullish momentum. That's what we're looking for. And that's one of the, the things that's very, very simple for us to identify. So that was the conversion line and the baseline. But let's have a little look at the Ichimoku cloud now. The cloud, or Kumo, okay, is the most prominent feature of the Ichimoku indicator. And the cloud is made up of a lower and upper boundary, and that space in between is often shaded, and that's what we see, okay? So we have in this particular, that will be the sort of the upper boundary, okay, is the sort of the lower boundary. And effectively what it is it's the space in between is often shaded, okay? And that space in itself can be of useful too. That space can actually give us helpful. And what we have is that the kind of the leading span, okay, is the average of the conversion line and the baseline, right? That's kind of, that's to see how it's created, okay? Leading span is the average of the conversion line and the baseline, and it's the faster moving boundary, and that's what we're particularly looking for. And that starts to become interesting to us when we start to look at, where we actually, when we get into our trades, where we start to how we run our trades and how we actually position our stops on trades. So, as I said there, we have, here we go, those kind of boundary levels. You've got leading span A, Seknu A. Once again, I apologize if I have not pronounced that correctly, is the average of the conversion line and the baseline. It is the faster moving boundary. So, and then we have, so in this particular case, that would be this area. Leading span B is the average between the 52 period high and low, and it is the slower moving boundary. Okay, this would be the second one. So, and it's important to note about the cloud that the cloud is projected 26 periods into the future. Okay, let's just take that on board. The cloud is projected 26 periods into the future. And we'll look, when we look at the charts in a moment, you'll start to see that, and we can see how we start to recognize that and understand how we want in our particular charts. But what is it saying is, the cloud here, okay, the cloud is constant about the relationships between the two boundaries and the shade inside it, okay, when it's effectively, when that shade is getting strong, when that shade is getting wider, okay, that is giving us an indication that actually, that trend is particularly growing in strength. When it's starting to get smaller and thinner, that's an indication that the trend may be about to change, and that starts to become interesting. That starts to become something that we can sort of take a note of as we're building our analysis of the markets. So, very simply, as I said, we're trying to sort of break this down to keep this as simple as possible for new traders. There are two ways to identify the overall trend using the Ichimoku cloud. The trend is up when price is above the clouds. Secondly, the trend is down when price is below the cloud. And most importantly, okay, and this is very simple, when the price is inside the cloud, the market is flat and we do not trade. And we'll show that in a few examples here, okay? But here you can see, we can see price here, okay? At the start of this chart, price is inside the cloud there, okay? We can see the cloud is there, price is inside the cloud. We wouldn't be touching it. It's only when we see this candle here closes outside the boundary of the candle, okay? And we are beneath the cloud, okay? We're beneath the cloud Okay, so we'll be, we have a bearish, bias. Okay, the trend is down when prices are below the cloud. Alternatively, if the candles were here printing above the cloud, well then, the trend is up. So that using that cloud quite simply becomes a very simple way for us to identify trends. Price above the cloud, we're bullish. Price beneath the cloud, we're bearish. Price inside the cloud, market is flat. We don't want to touch it. Remember, Ichimoku is ideally suited towards trading trending markets, strong trending markets, okay? And that's just what we're looking for, to just find the opportunity to take long trending trades. So when price is inside the cloud, the market is flat and you do not trade. Take that on board. Very simple, but very clear. So here we have, this is a chart here to give us a bit of an example. And what we have here, this is it's Kiwi dollar against the Japanese yen on the daily chart. And what you can see is there, when price is in the cloud, there we can see prices in the cloud there. Okay, that is an indication, okay, that the market is not in a clear trend at that particular moment, and so we wouldn't be looking to trade. Similarly, we can see it here. Okay, you can see price there. Okay, is inside the cloud. Okay, and in this particular case, we can see that price is just going back and forth before it actually makes its move down. And then where are we? Well, we're beneath the cloud, so we're bearish, and we'll look in a couple of slides about how we combine that with the baseline and the conversion line. Okay, but we can see here, when price is, when we see here, just that's the boundary level. When price here gets above the cloud, well then we have a bullish bias. And then when price is beneath the cloud here, we have a bearish bias. Okay, just very simply, price is above the cloud, we're bullish. Price is beneath the cloud, we're bearish. Price is inside the cloud, we're flat, we're congested. We don't want to be interested in trading when the price is like that. Okay, very simple. So, how do we use Ichimoku to find trades? We're traders, that's what we're interested in, aren't we? Okay, that's what we want to get involved in. So, first one is, for very much longer term trending trades, we can utilize the cloud, all right? So, as we've just discussed, traders can easily filter between long-term up and down trends, okay? When price is above the cloud, we're in a price is below the cloud, we're in a downtrend. Price is above the cloud, we're in an uptrend. So you can use the cloud to help filter between bullish and bearish market price. And remember, when price is in the cloud, the market is range bound. That's what we've just discussed there, okay? But you can start to utilize the cloud as a help to filter, okay? As a cloud to filter. So, when price is here, okay, it's above the cloud, okay, you're bullish. When here we can see, as soon as we get beneath, okay, we're beneath the cloud, well then what are we into? We are bearish, okay, and that becomes quite simple for us. That becomes just a very simple way to use the cloud to give you some just very quick, simple market analysis. So if, as a trader, you've been struggling, if you've been struggling to identify trends, if you've been struggling to work out whether the market is actually moving in a bullish trend or a bearish trend, well, using that cloud can be just a very simple way for you to try and understand how to identify what phase that market is in, and then to position yourself accordingly. Perhaps you already have particular trading tactics that you like. Perhaps you have particular trading ideas that you like to work with that allow you to effectively enter the trade. You just need to understand whether the market is in a trending phase or whether it's flat. And it is just literally above the cloud, you're in an uptrend. Below the cloud, you're downtrend. In the cloud, it's range bound, and you should avoid. The second way you can use is using the conversion line and the baseline for signals. So as the fastest moving elements of Ichimoku indicator, you can utilize the conversion lines and the baselines to provide trade signals. So the simplest version is where the faster conversion line crosses the base above the baseline for a bullish signal, or where it crosses below the baseline for a bearish signal. Very simple indeed. Okay, so conversion line, which is the fastest one, crosses above the baseline. That's a bullish signal. Where it crosses below the baseline, that becomes a bearish signal. That's what we're particularly looking at. Okay, so we can see here that in this particular case, the kind of the faster conversion line is below the baseline. Okay, we can see here that that's actually where it crosses there. Okay, beforehand we've had the conversion line above the baseline, and that is actually that's in a bullish environment. So just being able to use some people just like to even just use the conversion line and the baseline for the signals when they cross. That is what they're looking to trade in alignment with. And of course, when you get a nice trend, well, then that actually allows you to sort of to enter a trending market and stay with it as long as you can. But what we actually prefer is where we can start to combine the cloud and the conversion of baseline for a trading system. So what that means is very simply, we get bullish signals when price moves above the cloud. Okay, the cloud turns positive, so leading span A above B. The price is moving above the baseline and conversion line moves above the baseline. So you effectively have a particular point where you have the price is above the conversion line, which is above the baseline, and price is above the cloud, and the cloud is positive. So you have you've got a few things all coming together. You've got a confluence of events that have come together to sort of help you make your trading choice. Okay. So you're just combining the conversion line, the baseline, price action, and the cloud. So as I said, you've got those four elements all coming together, and when they do, there is a confluence of events, and that allows you to make a very good trading choice to sort of join what you believe will be a new bullish trend. So this is an example in the Dow Jones. Okay, the Dow Jones are here. Okay, and what we can see is that you can see here. Okay, price is above the cloud. Price is also it's also above the baseline. Okay, sorry, it's above the baseline here, and it's also above the conversion line, and it's also above the cloud. Okay, which is also positive at the same time there. So we have price, above the price action is above the conversion line, which is above the baseline, which is above the kind of the positive cloud, so to speak. So once again, you have those four elements in place that allow you to sort of try and join a particular trend, and that's just trading in the Dow Jones. And that's one of the joys of Ichimoku, is that it can work particular time frames. So we've showed a few examples here in like weeklies, dailies, 4 hours, but I appreciate even just for intraday traders, you have the opportunity to utilize this as a very simple sort of trading instrument for you. So it's that provides opportunity across the range for traders of all particular time frames. So on the flip side of that, okay, is we're looking at combining the cloud and the conversion of baselines for a trading system on the bearish side. And we're looking to expect bearish signals when we see price moves below the cloud, which gives us indication that the trend, that cloud turns bearish. Okay, the sort of leading span A gets below leading span B. Price moves below the baseline, okay, and the conversion line is also the conversion line is also above the baseline, okay. The conversion line is below the baseline, and that's what we're particularly looking at here. So we can see here price action here, okay, it's above the conversion line, which is conversion line is price is below the conversion line, which is below the baseline, which is below the cloud, and the cloud has turned positive here as well. Okay, cloud has turned negative here as well. So once again, you've got those four elements, that confluence of events, the four elements coming together, and that is what actually gives us an idea to basically to be able to sort of have confidence to sort of trade in the direction of what we believe will be the new trend. And here's an example. This is Kiwi yen, okay, on the 4-hour chart here. We're just there, exactly. So you can see the cloud here, okay. We know we've got the cloud price is price, here, okay, is below the cloud. We can see the cloud, and the cloud has turned negative. It's also beneath the baseline, okay, the blue line here. It's also beneath the conversion line, okay, and the conversion line is also beneath the baseline as well. So you've got those four elements: price, conversion line, baseline, and cloud, all in alignment, okay? And that's what you're looking to do. It's basically to be in alignment with that, to effectively sort of take that trend and try and run for that trend as long as it possibly offers you the opportunity. And that's, that is quite, it's quite a simple setup, okay? It's quite a simple setup. It's quite simple, it's quite mechanical, it's quite clear, okay? It's quite clear and simple to basically to identify, okay? It's you can see here, and even this particular example here, okay, price was for the most part going sideways and was inside the cloud, okay? Price going sideways and inside the cloud, and it's only once it's broke out of that, okay, broke out to the downside, well, then we had that confirmation. Price beneath the conversion line, which is beneath the baseline, which is beneath the cloud, okay, and the cloud is negative, and so you've got that confluence of events, and that's what we like to see. That's what we like to see. So with regards to placing stop losses and exits, well, there are actually some people who will trade the Ichimoku indicator without stop losses, okay, and they will just effectively use the changes there to basically to switch their positions. Personally, that's not my particular favorite way of trading. I think that having stop loss in place is the smart way to operate, and we would be suggesting that here, okay. We wouldn't wish people to be trading without stop losses, but what we can talk about is actually, remember, the Ichimoku cloud is you're looking to try and give yourself an opportunity to sort of, once you trade, to actually sort of join the kind of longest term trending. And this isn't easy, okay? It's easy to take a trend trade. What can be challenging is it can be challenging for traders to stick with it, okay? To stick with that trend, okay? So, one of the simplest ways you can do it is to basically, once the trade is entered, so in this particular case where price is beneath the conversion line, beneath the baseline, beneath the cloud, once your initial entry is positioned to taken, well, then actually your stop loss would be, in this case, kind of leading span B, the other side, okay, the other side of the cloud, all right? So if your entry's here, your stop loss would be here, and then what you would do is you would manually trail your stop along that element of the cloud, okay? And that's quite a how would I say, that's, and some people would say that is quite conservative, because it means that the market could come back against you a little bit. But what you're looking to do is to hopefully get the opportunity to ride the really long and strong trends as long as possible. Then, but on the flip side, there will be people who will want to sort of exit trades a little bit more aggressively, looking to take profit, and we will look at that when we have a quick look on on the charting package itself. So, in conclusion, ladies and gentlemen, Ichimoku Cloud is a comprehensive indicator designed to produce clear signals, and that's what it does. It's quite actually simple. And yeah, as I say, it may seem complicated. It's actually quite straightforward, and hopefully today it's broken it down and maybe demystified it, hopefully taken away some of the little bit of intimidation from it. It does work best in trending markets, okay, and we're looking to use it as an opportunity to ride long trends. Technical analysts can use the cloud to determine the trend. And entry signals can be identified using the conversion line, the baseline, along with the Ichimoku cloud. And when you do that, that is when you have the best opportunities show up for you. So we'll take a little bit of a quick look at some live markets. And as I said, those of you who haven't, I'll be in Traders Yard, okay, the Trading Spotlight community for the rest of the afternoon after here, okay, tradersyard.com/group/312. And don't forget to join us next time, okay? We're going to next session where you're going to hear my colleague Marcus, and he's going to learn about how to build an invincible trading mindset, including the importance of trading mindset, what can go wrong when traders haven't built a strong mindset, and how can traders improve their mindset. When is that? Well, that's 2 o'clock on Wednesday, on December 4th. Check your inbox for the webinar link, or head over to the website to register for the live webinars. As always, you can find plenty of analysis and education on the admiralmarkets.com website. And as always, if you're watching this later, okay, on demand, by all means, if you've got questions or queries, then by all means, you can contact us, email hello@admiralmarkets.com, YouTube, youtube.com/Admiral Markets, and the facebook.com/Admiral Markets Global. So I hope you found that useful. I hope, as I said, that's demystified the Ichimoku cloud indicator just a little bit much for you. Okay, hopefully for new traders, it gives you an opportunity to see that it is actually quite simplistic. Okay, in terms of providing clear trading signals for you once you are in a position to understand the kind of breakdown of that kind of conversion line, baseline, and the cloud. It actually makes it quite simple for new traders. So if you just bear with me a moment, I'll just try and switch across and have a look at the chart. I'll show you how to set it up on MetaTrader and what markets are providing us with at the moment. So just bear with me a moment. Okay, so I hope you can all still see me. I hope you can all still see the charts, ladies and gentlemen. Hopefully that's okay. That works out for you. Okay. But Vincenzo says he finds Ichimoku difficult to read, but an interesting indicator nevertheless. Absolutely right. Hopefully even Vincenzo has learned something today. Okay, in terms of understanding how to utilize it in your own trading. I'll feel very proud if Vincenzo, who normally has excellent understanding of all kind of trading, he's able to sort of learn something from us today and profit from the knowledge set. So firstly, this is Admiral Markets, okay, MetaTrader 4 Supreme Edition. So firstly, you need to know how to set it up. So let's have a little look. And we're just going to start. Let's have a Euro Sterling. Okay, so I've got a Euro Sterling chart window, which you can see I've just brought up there, like that. I'm just going to move some of these elements around. Now, what we want to do is find out, well, how can we turn this into Ichimoku? So what I have here, okay, is have the indicators, okay, and then if you go down to custom, okay, custom indicators, and then go down to Ichimoku, okay, there you can find it under custom indicators under the insert tab on your MetaTrader platform. And when we do it, there we go. And I'm going to show this at the moment how it is, because I'll show you how I example. Now, you see, when you bring it up, that's how it particularly comes out there at the moment, okay? And some people will be very, very happy with that. Personally, what I find is for me, myself, what I personally prefer is I like to have it a little bit darker, my charts, okay, especially for Ichimoku. I don't want the grid on, but I will have the period separators on there. And what I want is kind of a very dark. I particularly like a kind of a dark, almost like slate grey. Okay, for that foreground is a little bit on the pale side. Okay, I don't want grids. I want my I kind of like to have my bars up and down. My bull candles are kind of very bright, bearish candles, very red. There we go. So, and that's what I'm actually, here we go, let's just zoom into here a little bit. That's what I am, there we go. That's what I particularly like to. Now, I appreciate some of you might have particular differences. Some of you may have, choices. One of the other elements I particularly like to use is I noticed that the conversion line and the baseline are not as strong as I would like, okay? And that's very easily rectified, okay? So we just go to my indicator list and go to Ichimoku and edit. And we can see the red and blue lines, and then I'm just basically wanting to sort of make them. Just hang on a minute. I'm just wanting to make them a. Here we go. There we go. I'm just wanting to make it a little bit stronger. Okay, I just want to make them a little bit wider. Okay, so that there we go. So that they start to stand out. And hopefully that you can see that stands out a great deal more there. Okay, so. You know, what we have a look at is the Ichimoku card. Okay, so you know you can see it here. So this is the euro sterling, okay, daily chart here, and I just wanted to show you how it's set up there. And as I said, you know, we have the lagging line here, but I don't find that particularly useful myself. But you know, what we can do is we can utilize in terms of recognizing here, you know, this is euro sterling. So we have the cloud, okay. You can have the cloud here, okay. We can see that, okay. We can see that, you know, price here, you know, gets above the cloud, okay. Price is above the cloud, and then it becomes above the conversion line, okay, which is above the baseline. All right. Now, aggressive traders may have entered there. Others might have waited until the cloud have turned positive to be a sort of a buyer around about here, where price is above the conversion line, which is above the baseline. As I said, you know, being able to utilize is actually having your stop at the other side of the cloud and then following that all the way up, okay? That's what some people would like to have because they want to try and be able to sort of trade the long trends. Other people, well, other people will actually start to sort of look at utilizing something like the sort of the baseline as a possible trailing stop. Okay, those are people, once it closes the other side of that, that was when it might take trades out. Okay, but remember the thing about Ichimoku is we're looking to try and ride particularly long trends. That's what's actually, you know, being considered. That's what people are kind of interested in, and that's what it's meant to do. Okay, it's not meant for sort of trading range bound periods or weak trends. It's the idea is that you're able to sort of join it and demonstrate and join a particular long strong trend. And so if you look at, you know, charts that are in good trends at the moment, so you know, like we have here, this is the Nasdaq here. Okay, this is the 4-hour chart. You know, Nasdaq, okay, the American indices have been in strong trends. Okay, and so effectively you can see yourself where price is above the cloud. Price gets above the cloud. It's above the conversion line, above the baseline, and then basically that particular trend actually just runs and runs and runs until by trailing a stop along the other side of the cloud, okay, you're eventually taken out here, okay, but after the trade has taken off, and then once again the trade takes off again itself, okay, you can see the trade has taken off there again itself. So there you go, ladies and gentlemen. I hope you found that useful. I hope that gave you a little bit of insight into the Ichimoku trading indicator. I hope that's kind of demystified it and cleared it up for you a little bit and helped you just to sort of see it in a new light. As I said, those of you who wish to, you can come and join me in Traders Yard. I'll be there for the rest of the afternoon. And as always, I wish you the best of success in your own trading. I look forward to speaking to you soon. Many thanks, traders.